Hi, everybody. It's Ali. We're here at the Madrid Investment Summit. Lots of energy in the crowd, many clients. One of the topics we're talking about is geopolitics. I'm very happy to be here with Jeremiah Buckley, who manages U.S. equities, and Luke Newman, who applies an absolute return approach. Guys, lots of discussion in this world about geopolitics and being equity managers. How does it feel being an equity manager in particular in this environment?
Yeah, so it's interesting. I think there continue to be a lot of themes outside of geopolitics. There continue to be a lot of themes, exciting investment themes in the market. So obviously AI has been a big driver of the market and earnings growth. But what's exciting to me is there are a lot of areas outside of AI that are continuing to grow. We're seeing really strong earnings growth, the commercial aerospace, travel companies, capital markets, which have been rejuvenated. We're seeing substantial growth in M&A and IPOs now. There's lots of innovation in other areas of the economy, like healthcare and pharma and biotech. And so to me, there's lots of secular themes that are really exciting to invest in, even with the geopolitical backdrop.
That's great. Luke, what do you see?
So I've got to say this is a great environment to be running long-short equity funds, or for active management in particular. I think the movement we saw away, we're getting on for the third year now of the cost of money moving away from zero. We understand the reasons why it was there. We understand why it's been normalized. But what it's meant in a technical sense of moving that discount rate away from zero has meant much more dispersion for stock pickers. But there's been real world effects as well. And when we're talking to listed management teams around the challenges they have now to justify against money having a cost, debt having a cost, we're seeing more dispersion in a real world sense as well. So for active stock pickers, it's a great environment.
Now, Jeremiah, you mentioned AI. I know it's not the only thing that's out there to take advantage of, but what are you seeing in AI?
Yeah, it's certainly an important part of the market, driving substantial earnings growth. To us, our focus has been on the enablers and the adopters. So when I talk about enablers, I'm talking about obviously semiconductors, but all the companies that are providing that networking, cloud services, and the companies that are coming out with applications that provide the productivity for those companies. And then secondarily, it's the adopters. So we need companies outside of tech and comm to invest in these opportunities, taking advantage of the productivity, getting a good return on that investment for this to keep going. And so for us, we think it's really important as a US large cap manager to find companies that have the scale, the balance sheets, and the cash flows to be able to invest, and then the capabilities, the talent to execute on these exciting productivity tools.
Well, we were talking about cost of capital, and when there's a cost of capital, there are winners and losers, and Jeremiah, you try to avoid them. Sometimes you guys try to actually lead into them and find short opportunities. Where are you seeing some interesting opportunities?
They can be. And what's interesting and unusual for the last couple of years is that we're finding a lot of those in US equity markets. Now that might sound strange when you see the performance of the technology sector, but move away and look at the real American economy. There's been some challenges, function of all sorts of factors, normalization post-COVID, pressure on labor markets, pressure on financing markets. But we found shorts in US consumer goods, snacking areas, some normalization post-COVID, but actually the work we spent with the pharma companies bringing the BC drugs to market, actually for us on the short side, one of the best ways we could reflect the change that we've all seen in societies is actually through our short book and some of those food and snacking companies. So they've been really good contributors for us.
That's great. That's great. So take a step back. You're meeting with tons of investors here today, tons of clients. What do you think they're missing, perhaps, as they think about the world, as they think about investing?
Yeah, so a couple of common concerns that I've heard here over the last 24 hours has been, one, the concentration in the U.S. market. But I mentioned a lot of areas outside of AI continue to show really strong growth, and valuations there to us are reasonable. So we think all that can be addressed. Secondarily is the multiple on the overall market. I think it's important to realize that the earnings growth of the U.S. market, even with some losers and within that, is better than it has been historically. Productivity continues to be faster than expected, which is leading to operating margin leverage. And so overall, the earnings growth has been quite positive. And then the third concern is, with all this talk about AI, is there a bubble? Are we going back to the dot-com issues that we've had in the past? And for us, from a research standpoint, our team needs to be really diligent on making sure that the revenue to support those CapEx numbers and backlog numbers that we're seeing pan out and that there's an attractive return. And so we do that with our terrific team of analysts are asking their companies as they talk to them on a daily basis, how are you getting returns? How are you taking advantage of AI? Or on the contrary, at some point when they say, you know what, we've stabilized our investment, then we have to think about that and we have to adjust appropriately. But those have generally been the concerns, but we think overall the environment is still positive for equity markets.
Right. Luke, what do you think?
On our side, and a lot of our discussions have centered around the changing use of absolute return or liquid alternatives within our investors' portfolios. And it's interesting, we've seen ourselves used as a lower risk equity proxy over time. We're certainly seeing some interesting conversations with fixed income allocations. So given the concerns around governmental debts, pressures in particular, we're seeing some movement into asset classes such as ours. But I think the most interesting conversations are around correlations, not in the equity market, but between equity and fixed income. And I think that's a relatively recent resumption of a trend. For a long time, you saw that offsetting nature. We're seeing clients wanting to know how can absolute return give some level of diversification within their own portfolios. So when you start to see periods like we had in 2022 of equity and fixed income correlating unhelpfully, then could absolute return provide some ballast, provide some uncorrelated return in that environment.
Great. Thank you, guys. So you're hearing that there's lots of change in the world, whether it be geopolitics, whether it be cost of capital, lots of opportunities, both on the long side and the short side. And that's what 350 people do all day long at Janus Henderson, is try to find, from an active management perspective, the best opportunities for you. Thanks for joining.